Tesla, ticker TSLA. We're going to go through some stock analysis on this today. So last time we covered it was when Tesla was up in this range and we called this massive short. Now, what are we looking at going forward? So as of right now, we've come on the right chart here. This is where we have all our anchored VWAPs. What you can see is we have now broken and held all of our anchored VWAPs so far. So this is quite a bullish signal normally, and it kind of indicates that you'll try and run. So we still got that gap there, slightly missed that. Normally when you get these big intraday gaps, multi-day gaps, what you tend to see is you'll try and run to fill it, like here. You'll just shy it, and then you'll come and run in to fill it. So you could expect that fill to happen, if not today, coming into next week. This week. So that is firstly the first thing we'll be looking at. This gap fill does seem quite likely. Now, until we break this range, I'm not too fussed on this stock. And the reason for that is we're not at any kind of key levels while we're in that range, but it is also a big kind of resistance zone. Obviously, we kind of chopped in there for quite a while, led to a massive sell-off off the earnings, obviously. And now we're coming in for that retest, so we'll see if we consolidate, and that's why I won't take any trades while we're in that range. However, if we can start breaking that range, again, that is here on this chart, that is our second deviation, so we can expect a breakout if we hold above it, and that will take us back to these third deviations, and that's where the nice trade opportunity is going to come, because it's going to provide the same setup that we had here. Because the way these setups work is if you come into these green lines, which is our third standard deviation, once you come into here, you normally expect a big reversal to happen back to statistical mean, which is these white lines. So near enough to the penny here, to the penny here. And again, this is our statistical mean. So you tend to go third deviation straight to mean. So as we push back up to here, and again, as of right now, that's 285 to around 295. That's our third deviation to over on Tesla. It wouldn't be unlikely to see price push up here, or that getting price up there is a bit more of a gamble. And that's why we don't trade to these deviations. However, if price can get there, then it is a high probability setup, kind of back all the way down to about 215 to around 190. So that would be the main trade setup. If we can come up to 285 to 295, big shorts down to 215, 290, or 215 at 195. So that would be the nice main trade setup. Now, if we do break out of here again, then you do have that next layer of resistance. These are our fourth standard deviations, and that's going to be 315 to 320. Again, these are really going to be high probability shorts, where we can expect to get a big profit down. Again, if you're trading these fourth deviations, we tend to take some profits at these third and then run down the rest down to this level. The reason we do that is these fourth deviations, this is where a stock will choose whether it wants to go parabolic or trade back to normality. So if we come into here, you normally get the short down to these third deviations, and then that's where we will take some profits and move stops to break even, because that's where the stock will decide, does it want to go parabolic, which occasionally they will. Again, not everything's going to trade reasonable in the market. That's where your parabolic breaks will come. If we get your retest up there, retest your third, and then you run, or that's where we just sink and come all the way back down. So again, we want some size in for if it comes down, but you definitely want to take some profits into those third deviations, because again, that's where we can bounce and then do the parabolic crazy move, which we know Tesla has done in the past. So in a quick summary, what am I looking at? Shorts, as of right now, nothing. Shorts as we come into 285 and above. Again, your first range is 285 to 295. Second range is 315 to 320. What are profit targets? Profit targets on these shorts are going to be mean. Obviously, we'll take some profits and move stops on your way down at these other levels, but the overall main target will be 214. Now, if it ends up breaking through and we come up to 315, 320, this is our next short level. So what is going to be targets? First take profit is going to be 295 to 285. This is where we move stops to break even. And we take some profits, and then we can run some money down to 215 as well. That is the main trade plan I personally have on Tesla going forward. I hope you enjoyed the video. Hope to see you next one, and that's it. Peace.